Hey guys, welcome to Assisted Living Investing. It's Brandon Gustafson. I'm happy to have you back on the channel. I just wanted to quickly recap what we've talked about the last 3 videos. We've been talking about tours, the importance of a virtual or an in-person tour, getting out and talking to people and helping them understand what a tour is, a virtual tour versus an in-person tour, why it's important to have a tour, and what that can mean for you in your underwriting and your due diligence process. So make sure you comment down below. Let me know if that was helpful. If there's anything that you found in your process as you're going through and trying to acquire a facility that you found to be a little more helpful. I'd love to hear your feedback so that I can implement that into my videos going forward. But today we're going to talk about something that people have been asking me about a lot on Facebook groups, here on the channel, my calculator. So for those of you that don't know, I have created a calculator to underwrite assisted living acquisitions, and I share it very broadly. I love to share it with people and make sure that it's a resource for you to use so that you can have something as you go through. I think it's something that everybody looks at as a first step on their path to underwriting a deal and seeing if it's going to be something that's profitable. But I send it off to them, and then oftentimes I don't hear back from people, but I worry that you get the calculator and you're like, oh my gosh, this is so complex. I'm not sure exactly how to use this. So I wanted to give a tutorial on how to use my calculator, how it works, and help you understand how you can better utilize it. I do plan on this being probably a 2-part series, possibly even a 3-part series, just depending on how long it takes to go through things, because I want it to be very comprehensive so that you know how to use the calculator and understand some of the terms that I have on there, rates and ratios and different things like that. So I want to make sure this is very comprehensive, but make sure you comment down below if you have any questions. I can dive into it. We can set up a time for a quick call to go over it together, and I can help describe things and help you work through the process as you're trying to acquire your facility. But before I get into going through the calculator and the full tutorial, I wanted to go through a few definitions just so that you have them up front as you're going through, and then you can refer back to these definitions later on in the video. I hope that's going to be helpful for you. So the first definition that I've got for you is underwriting. So what is underwriting? Underwriting is the process that you go through as an investor to determine if you're comfortable with the amount of risk involved in the deal you're interested in. And a part of underwriting is looking at different rates and ratios. So we're going to talk a little bit about cap rates here, but there are a few others that are in my calculator as well. So we'll get into those as we get into the tutorial, probably in part 2. The next definition that I wanted to go over for you is a cap rate. So a cap rate is something that you're going to hear a lot of people, especially in a commercial world, you're going to hear a lot about cap rates. So I wanted to kind of give you an overview of what a cap rate is. A cap rate is used as a quick way to evaluate a project and what the return on investment, what that ROI might look like. So it's just a quick, easy way to look at it. You figure the cap rate by taking the net operating income, which is NOI, and you divide that by the purchase price of the facility. So say you're purchasing something for $1 million. They have an NOI of the past year of $100,000. So you take 100,000, divide that by $1 million, you have a 10% cap rate. So that's just the quick and easy math on how you do a cap rate, what a cap rate is. The next one is going to be NOI. So what is net operating income, right? I just talked about that as a key part of the component that gives you the cap rate. The NOI is the amount of money that is available after all of the expenses except for interest and taxes. You may also choose to look at a more normalized NOI, and that's going to be looking at things where you're putting in different things like an add back, and I'll get into that actually in the next video, what an add back is. But there are certain things that you can take out of a pro forma when you're looking at it, but there are also things that you might want to put back in. And so a normalized NOI is looking at what currently exists and then taking out things that currently exist out from your analysis and putting things in that may not exist. So that, for example, could be something like a management fee. Like if you wanted to pay somebody to be the manager of the facility, it's typically like a 5% management fee. You could add that in for the normalized NOI, or maybe they're doing a management fee and you don't want to do it, so you could take that out to do your normalized NOI. When you're doing that. And then you can build a cap rate based off of that normalized NOI rather than the real NOI. That's probably going to give you a more realistic cap rate for your current situation. The next one is price per bed. So this one is, I think, pretty self-explanatory, but I want to make sure, because I'm going to get into that a little bit here in the video, in the tutorial on the calculator. So price per bed is the price per bed rate that determines how much money you are paying as a buyer for each bed in the facility. So how you figure that price is you just take the purchase price. So again, let's say it's $1 million. You divide that by the total amount of beds in the facility. You could also do this by a price per unit. So sometimes you're going to be able to have multiple beds in a room, so you could do a price per unit. Same idea. Let's say you're purchasing a facility for $1 million. You got 100 beds in it, so you take $1 million, divide that by 100, and that equals $10,000 a bed, which is an incredible price. I think what you would be realistically, like a good benchmark for you to probably set is about $100,000 a bed. You obviously want to look at your own criteria and see. And if you're getting larger facilities, you're probably going to get a better price per bed there. I've been looking at some recently that are like $60,000 a bed. So just kind of look at your criteria, look at cap rates, look at price per bed, just kind of do that. But those are some really good rates that you want to do. And we're going to get in that in the tutorial and how you can use that in my calculator as well. The last definition for you today is pro forma. So pro forma is a method of calculating financial results using certain projections or presumptions. A pro forma allows you to look at past financial performance and project that performance into the future. So it's taking how something has performed in the past and then making a few tweaks to it. Like, I'm going to increase rents by 10%, or I'm going to be able to decrease payroll expense by 15%, or I'm going to hire a management fee and that's going to be an increase of 5%. So I need to put it in there. So you're looking at all of those different factors and you're putting it in there, and it's allowing you to project out what things might look in the future. So I've got a version of that, a quick and easy version of that that we're going to get into today in the tutorial. And then I've got a more complex version that we're going to get into next video, where I get into a lot of kind of the nitty and gritty of what it looks like to build a big kind of long-term 25, 30-year pro forma that I've got in my calculator. So hopefully those things will be useful for you. So now we're going to jump here into the video of the tutorial of the sheet. So obviously this is in Google Sheets, which is just Google's version of a spreadsheet. I found that this actually works out quite well. I've built this enough and worked enough in Google Sheets, and I'm very familiar with working in Excel. It's what I do for my full-time job. I think you're going to be able to, you'll find that there's a lot of the information in here that you need to be successful. So the first tab that we're looking at here is the Home Info tab right there. So Home Info is where you're going to put the information about the home. So you can put the name, the location, comes right here, assisted living entity and real estate entity. For me, that's how I track which of my entities are going to own and hold these, which one's going to be the operating entity, which one's going to own the property. Information about the house, so the year it was built, bedroom, bathroom count, the square feet, and those things down there, those things up there are going to feed some of those ratios there that are just kind of helpful. So you can get a count of price per bed, price per bathroom, price per square foot, just looking at a few things like that. You can put in here the neighborhood classification. So if it's an A, B, or a C, property type, is it residential, commercial? Your ideal tenants, are you working with elderly care? Are you working with mental health? Are you memory care facility? Kind of what do you want to do with this facility? What's your strategy, your rental strategy? Like, are you going to be bringing in people? Are you going to be using something like a Place for Mom or another resource like that? Are you using your Facebook page or your own website or whatever? Then notes on the offer that you want to make. These are just general notes, a section for that. And then this is questions that you have for the broker. And then up here is just going to be a quick and easy way for you to grab. These are the people that I am using as I'm purchasing this facility. So your broker, the listing broker, accountant, attorney, lender, your payroll vendor, who did the inspection, so that you have that information, who the title company is on the purchase of the facility. If you have a property manager, who that person is. If you have to hire out a contractor, who that is, and if you have a handyman as well. So name, phone, email, any notes that you have. It is really easy to have this in one spot on a spreadsheet. So that's the purpose of this. And then right here, if you are able to find out Medicaid rate in the state that you're working in, usually this is going to be a daily rate. Say it's $70 a day for that resident. You're able to put that in there. If you've got a private pay rate, you can put that in there as well, and just kind of make some notes around those things. So this is just meant to be where you're going to capture a lot of that information that's going to allow you to have it in one spot and keep yourself organized. So I found that to be very helpful as I'm going through and purchasing facilities. Now we're going to get into the quick and easy tab. So this is the big thing that we wanted to get into today. This is how you can quickly analyze a deal and see if it's something that's going to work for you. Okay, so what you want to do here is you're going to get the historical financials. This could be the P&L, the profit and loss statement from the seller. They'll give that to you in the process, and so you'll be able to see what the total income is, and then you'll be able to look at expenses like the payroll expense and then other administrative expenses. And that's going to give you your total operating expense. So this is very, very high level. We've got here, this is going to be your payroll expense. And then this is going to be your total expense. And then this field right here is actually just your total operating expense minus the payroll. So that's going to give you all of the other expenses rolled up into one line item. So when you look at a P&L, you're going to be able to see this is going to make a lot of sense. So you're just going to break out that payroll line expense, and then you're going to take the rest of all of the other operating expenses. So there's going to be a line at the bottom that says all expenses or something like that. You take that number minus out the payroll number, and that's going to be all of the expenses that you've got that kind of fits into this bucket right here. Hopefully that makes sense. Comment down below if you need help understanding that. I tried to make this simple so that you're able to to put this information in it. What you really need to know is you enter this number and you enter that number, and then this number is going to populate itself. Okay. This is a number that you're going to enter in. This is all of the income that's coming into the facility. You're going to do that for historical years. So typically you're going to get 3 years of historical financials on a facility. That's very standard. It's something that a lender is going to need from you. So make sure you're getting that information, unless it's something that they just haven't owned for that long, in which case you just get what you can out of it. But right here, you're just going to put those numbers in for those years. And then if you have in the current year that you're working in, this year is 2021. So you would just do year-to-date numbers for that year. So right now we're in August of 2021. They give you financials through the end of July. And so you put that in there. And then over here on this factor section, I've got a thing where you could say months in the current year. So in that case where they gave you to the end of July, you would just put in a 7 right there. And that's going to factor in what this 2021 projection is. And it's just going to make it so that it projects those numbers out so you can see what they might look like by the end of 2021. Obviously, when you're doing that, you want to kind of make sure that it's in line with previous years as well, just to make sure that it looks correct. And from there, I put in a pro forma line. So this one's just going to let you project it out, what it's going to look like in the future, just like 1 year into the future. Nothing fancy here, but it's going to let you kind of see what that's going to look like. Okay, so now we're going to hop down here to this section. So this is going to be your asking price here. You've got the desired cap rate right there. And then here, these are what the current cap rate is. So this is the asking price. This is the current cap rate that you would see for that year at that asking price. So you would take this NOI, this net operating income, and then you're going to divide that by the asking price. And so you can see from there what the cap rate would be historically, and then where it's kind of at today, right? So you can see how it's kind of trending a little bit there. And then this would be the price at the desired cap rate. So this is saying this NOI, and then if I wanted it at an 8% cap rate, what would I be offering at that point? So in this case, you'd actually be offering more than the asking price. So you're getting a pretty good deal there. So it gives you a kind of overview on that one. This one right here kind of shows you this cap rate. 7.5 is a little bit lower than 8. So this number is going to be a little bit lower than that number. So it's just gonna kind of let you look at those things a little bit historically and see if you're getting a good deal, getting the deal that you want to get on something. And then over here, this is what the cap rate is based off of that pro forma. So this is really the section where you want to pay attention to. It's good to see what it has trended at, but this is what you really want to pay attention to. If the pro forma is in line with that asking price. So the cap rate that I've got here, these are just kind of dummy numbers I threw in there. These are, with that pro forma number, it's a 6.3% cap rate, which is lower than that 8%. And that's going to put you at a lower asking price. So this number right here is kind of what you would look at from your perspective as possibly that offer that you want to make. So you would say, oh, you know what, I'm going to offer you 1.1 million rather than 1.25 because that's about where I need that to be for me to look at. Hopefully that makes sense. Make sure you comment down below if you have any questions on how that works. And then right here, this is the price per bed at the asking price. So this is saying total amount of beds, and we'll get up here into this factor section here in a second. So, there's 14 private beds, 2 Medicaid beds, so that's 16 total beds, and then we're going to divide that by this asking price, and that's going to give us the price per bed at that asking price. And then right here, this is the price per bed at the desired cap rate. So this is those same 16 beds, but at this price right here. So you can kind of see what the gap is right there, and it kind of gives you a good idea on if those numbers are pretty close to the same, you're probably in a good spot. If there's a big gap, this is a $12,000 per bed gap. That's a pretty sizable gap. So maybe you want to look at that and say, maybe I want to get this number up to $72,000 per bed. And so you can kind of start playing around with it and see what that gives you as far as your offer number. So just really quick, easy way to look at this. This is going to give you, if you have comps that you're looking at in your analysis, again, this is going to be the sales price, what that comp sold for, what the NOI on that was, and it's going to give you a cap rate. So then you can look at it and just kind of compare the deal that you're looking at against some different comps and what their cap rates were to see if it's marketable, because you want to make sure that your offer is also within reason, that it's competitive with the market. You don't want to pay too much, but you don't want to pay too little and steal something from somebody if you can help it, because we're all in this to kind of help each other and make sure everybody's kind of productive for it. And then down here are just a couple of definitions. What is a cap rate, and then what is a price per bed, just in case you need to remember exactly what it is. I went over it earlier in the video in the definitions section, but this just put them in here so that you can have them readily available for you. Now I'm going to jump over here to the factor section. A lot of these numbers are going to feed things over here in the table. So this right here is kind of meant to be static and not make a lot of changes. What you would be changing is like those numbers, these numbers, and these numbers based off of what you're getting in the P&Ls. The rest of it is just kind of going to stay there. And from here, you can put in your desired cap rate. So, say you wanted a 9% cap rate, and you could see when I did that, it adjusted this desired cap rate number, cap rate number, that offer that you would do there. It's going to change it back to 8, and you'll see when I do that, it's going to adjust this and puts that number back there. Okay. These are projected expense increases. So this is right here in the pro forma section, saying, I think that expenses are going to adjust and they're going to be up to 25% higher than they were. Maybe it's 20%. And you can see when I change this, those sections right there in the pro forma are also going to adjust. Okay. So we're going to keep that at 25% for now, but you can adjust it as needed. This is your private bed and your Medicaid bed count. So, maybe you're looking at a facility that's a 20, I don't know, let's say it's a 10 bed facility. It's got 2 private rooms and it's got 8 Medicaid rooms. And so you can see when I adjust that, it doesn't look right. Let's say maybe it's, there are, I don't know, let's say there's actually 4 private beds and there are, let's say there are 10 Medicaid beds. Let's adjust this and say that it's 6 private beds and 10 Medicaid beds. So at least we're getting a positive NOI. That's what I was shooting for right there. Not great numbers right there. Like it's not good, but it kind of gives you an idea. We'll go back now to the example that I had in here. So we had we had 14 private and we had 2 Medicaid beds. Gets us up there, but you can adjust those based off of the deal, and numbers are going to adjust where you need them to be, or where they should be, based off of the P&L that you receive from the seller. Right here, these are private bed rates, Medicaid bed rates, and these are monthly rates. So $3,500 a month, $2,800 a month. It's going to let you see what those look like. And then this is a vacancy amount. And really quick, this is these bed rates and then these bed counts are what are informing this part of the pro forma. So say, your private bed is actually $3,600 a month and you had 1,400 beds. So you could see that pro forma increased by, a few $100, a few $1,000s. I'll take that back down to 3,500, but you can play with it that way. So if you know what those look like, you can kind of project out what your total income is going to be. And then this vacancy rate is saying 20% of the time I'm going to have, of those 16 beds, 20% of the time they're going to be vacant. So you could change this then to 15%. You could change it to 10%. You can see it's adjusting that total income number up there as you're doing that. So I'm just going to keep it at 20%. It's good to be very conservative when you're doing your underwriting. So probably put in a number right there, at least for your offer, that is a higher vacancy rate. I think 20% is reasonable, but for your own personal view of how things are looking and how you want it to be, maybe a 10% is what it's actually going to be at. For your underwriting purposes, you want to do a 20%. That's what you're going to base your offer off of. That's how you're going to do your underwriting to make sure it's a good deal for you. But you could run better case scenarios to see what it might look like if you had a 10% vacancy rate rather than a 20%, and play around with those numbers. So that helps you out a lot there. If you have any renovations that you're going to be putting into the facility, say you've got to, build a bathroom, or you've got to build a new office, or you've got to do an extension, or you're renovating a garage or whatever, you're going to put in those projected renovation costs there. I've just put in $100,000 on this one. I've had facilities where it's very minimal, just cosmetic stuff, a few $1,000s. I've had one where we had to do a bathroom and then build an office and things like that. And that one took, $20,000 or something like that. So just kind of look at what those projected renovation costs might look like. And then from there, the asking price, and this actually is going to inform the field over here. So if I click on that, it's going to change that one to 1.5. And over here, if I change that cap rate, you'll notice that it also changes the cap rate over here in that section. So those are both, these two fields are actually fed by the factors up here. And then this one I went over a little bit earlier. This is to do the 2021 projection, or the current year projection, based off of the year-to-date numbers. So you just would put however many months in the current year you have those financials for, and that's going to then build out a projection so you can just kind of see what those look like. So that's it for the calculator tutorial today. As you can see, it's quite complex. We'll get into in our next video where I get into more of some of the nitty and gritty of how I do things on a longer projection, and listing out line by line expenses and really diving into the seller's financials and what that looks like, and how you can start looking at those and building out real projections for yourself. So I hope you like this video. I hope you found it valuable. Make sure you like the video, give it a good thumbs up. Make sure you click on that bell so you can be notified when I put out other videos. Subscribe to the channel. Make sure that you're joining the conversation on Facebook. I'm doing short videos on TikTok, so you can watch those. And stay up to date on our Instagram and Twitter feeds to make sure that you know when a new video drops, and you can jump over and see what's going on the channel. Comment down below if you have any questions, if you need me to go through and get a little more specific into the calculator with you and help you out with that. And I'll look forward to seeing you next time. Thanks for joining us today on Assisted Living Investing, and I'll catch you next time. Have a good one. See ya.